Welcome. In this video, can XCN get into the top 100 coins? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze the XCN.
The presence of a bearish order block above the price indicates a highly critical situation in market structure. These zones are defined as areas where sellers have previously entered the market aggressively with strong sell orders accumulating. When a bearish order block forms, it essentially reflects a process where the price was sharply rejected upon reaching that level before, showing that buyers were unable to withstand the selling pressure. That's why when the price climbs back toward the zone, many traders and investors pay close attention. However, one of the most important points to note here is that on its first approach, the price often fails to break through the block. The reason for this is that the heavy concentration of sell orders within the block suppresses the price and weakens the bullish momentum on first contact. Therefore, it is considered quite normal for the price to pull back somewhat after initially touching this level. This pullback actually acts like a natural testing process for the market. When the price fails to break through the block on its first attempt, it shows that sellers are still strong in that area and buyers have not yet built enough pressure. However, this does not mean that the block will never be broken. On the contrary, if the price regains strength after the pullback and heads toward that level again, it reflects buyers' determination and the market's appetite for upward movement. A bearish order block that cannot be broken on the first attempt may indeed be broken on the second or third try, and when it is broken, the upward move often accelerates with significant strength. This is because the sell orders within the block are gradually absorbed with each test, and eventually the buyer's pressure outweighs the sellers. Psychological factors are especially important here. Many investors seeing this block above the price may look for selling opportunities. That's why sell pressure intensifies on the first touch. But if the price begins moving back toward the block without a deeper tracement, it proves that buyers are strong and confident in the market. So even though failing to break the block on the first attempt might appear negative, it is actually part of a process that tests buyers' strength. As sell orders weaken through this process, the likelihood of an upside breakout increases. From a technical perspective, failing to break the block on the first touch is usually considered a healthy market move. For a level to break, sufficient liquidity must accumulate and seller strength must diminish. If the price broke the block in a single attempt, the move would often be unsustainable and could quickly reverse, forming a false breakout. However, breaking it after multiple tests confirms that the block is genuinely overcome and marks the strong beginning of a new uptrend. Such bearish order blocks are also important reference points for investors when building strategies. Some traders open short positions during the first touch to profit from the pullback, while others wait for the block to be broken to catch a strong buying opportunity. Therefore, when the price approaches these levels, market psychology is directly affected and trading volumes tend to increase. The pullback that happens on first contact especially reminds buyers to be patient because the real bullish momentum usually appears after the block is broken. Another key point is the level of retracement after the first rejection. If, after touching the block, the price pulls back but does not fall too deeply and quickly recovers, it shows how strong the buyers really are. Each failed test actually works in favor of the buyers since each test consumes more of the sell orders within the block, weakening the sellers and eventually making it easier for buyers to push the price higher. For this reason, a block that is not broken at first becomes increasingly likely to break later on. All these processes reveal the natural supply-demand balance of the market. It is completely normal and expected for the price to be rejected upon its first contact with an area where sellers are concentrated. But what truly matters is how the price behaves after the pullback. If, after retracing, the price builds a new upward wave and approaches the block again, it proves that bullish sentiment is strong in the market. In this way, the first failure actually lays the foundation for a bigger success. In conclusion, a bearish order block above the price may initially look like a barrier, but it can indeed be broken. And once it is broken, the upward move tends to gain strong momentum. Failing to break it on the first attempt is simply a process that tests sellers' strength and buyers' patience. Once that process is complete and selling pressure weakens, breaking the block signals the beginning of a much stronger bullish move. That's why having a bearish order block above the price may create short-term challenges, but in the long run, if the breakout occurs, it represents a major opportunity. But we can't base analysis only on the order block, so let's also look at other metrics. Stay tuned.
One of the most important indicators of price action in technical analysis is the structure of highs and lows. When the price of an asset forms a higher high, it shows that the market has gained upward strength and that buyers are beginning to gain an advantage over sellers. This higher high proves that buyers are strong enough to push the price above the previous peak. However, a higher high alone does not guarantee the start of a trend. For a sustainable upward trend to begin, not only must the highs move higher, but the lows must also shift upward. In other words, the price must form both higher highs and higher lows. This structure is what technical analysis defines as an uptrend. For example, suppose the price of an asset previously peaked at 100, then pulled back and formed a low at 90. If in the next upward move, the price rises to 105 and forms a new high above the previous 100, this is a noteworthy signal. But the critical point here is where the price retraces afterward. If the price drops below the 90 low and falls, for instance to 85, then despite the higher high, it is hard to say the trend is upward, because a lower low has formed. However, if the price forms a low at 95, which is above the previous 90 level, then a higher low has also formed. In that case, with a higher high followed by a higher low, we can confirm with strong confidence that an uptrend has begun. The combination of higher highs and higher lows not only shows that a trend has started, but also reflects market psychology. A higher high shows that buyers' confidence is increasing and sellers' pressure is breaking, while a higher low proves that buyers are not giving up. Even though profit-taking or short-term selling occurs, buyers are still able to defend the price at a higher level. This means buyers are treating each pullback as an opportunity, while sellers are gradually losing strength. In other words, trend analysis presents the psychological balance of the market in numerical form. When an uptrend begins, a domino effect is usually seen in the market. First, short-term investors who notice the higher high enter positions. After the higher low forms, more cautious medium-term investors also begin buying. This step-by-step participation drives the price even higher, because the perception that a trend has started develops. This perception feeds investors' expectations and increases buying pressure. In uptrends, the upward price movement is driven by the psychology of expectation. As people believe the rise will continue, they keep buying, pushing prices higher and creating a self-reinforcing cycle. The consistent formation of higher highs and higher lows also shows that the trend is progressing in a healthy way. In a healthy uptrend, the price never moves straight upward in a line. Instead, wave-like rises are observed. First comes a rise, then a correction where a higher low forms, then another rise to a new high. As this cycle repeats, the strength of the trend becomes more evident. In this way, both short-term and long-term investors can enter at different points. This structure also makes the trend more sustainable, since a broad-based wave of participation is formed in the market. Alongside the formation of higher highs and higher lows, other technical indicators also support the trend. For example, an increase in volume usually confirms these structures. If the price rises while volume increases, the higher high becomes a stronger signal. If during a pullback, the price forms a higher low and volume does not drop significantly, it shows that buyers are still active. Moving averages are also among the elements that confirm this trend. If the price rises above the 200-day moving average and begins to hold there, the presence of higher highs and higher lows strongly supports the idea that an uptrend has begun. One of the most important points investors should know is that the structure of higher highs and higher lows indicates not only the start of a trend, but also its continuation. Higher lows show that strong buyers are supporting the price during pullbacks, and that sellers are losing control of the market. Therefore, investors should track the formation of these structures not just once, but continuously throughout the trend. If at some point the price fails to form a new higher high or forms a new low below the previous low, this signals that the trend is starting to weaken. In conclusion, when the price forms a higher high followed by a higher low, this is one of the most reliable signs that an uptrend has begun. This structure is not just a technical pattern, but also a reflection of market psychology. It shows that buyers are beginning to dominate the market, sellers are retreating, and investors' expectations are shifting upward. Once an uptrend begins, it often becomes a self-sustaining process, pushing prices to higher and higher levels. In other words, the formation of higher highs and higher lows is not just a chart movement, but a signal of the birth of a trend.
When evaluating the conditions for XCN to enter the top 100 in the cryptocurrency market, it is necessary to consider market dynamics, investor psychology, and the supply-demand balance. Currently, XCN is ranked 132nd, with a market cap of approximately $427 million. The coin ranked 100th has a market cap of around $704 million. This roughly means that XCN could enter the top 100 if it experiences about a two-fold increase. However, this is only a mathematical comparison. In reality, achieving this increase requires multiple factors to come into play. Market rankings are not determined solely by price. They are also directly linked to project credibility, ecosystem growth, exchange accessibility, community support, investor interest, and overall market trends. Therefore, for XCN to rise in this ranking, it requires not only a price increase but also a strengthening of its ecosystem, wider adoption of the project, and investor confidence. A coin entering the top 100 is also psychologically significant. Cryptocurrencies ranked in the top 100 on platforms like CoinMarketCap or CoinGecko naturally attract more attention from investors. This applies to both retail and institutional investors. Especially on the institutional side, projects outside the top 100 are generally seen as riskier, while those within the top 100 are considered to have passed a certain threshold of credibility. This increases buying appetite and supports upward price movement. Therefore, XCN doubling to reach a $704 million market cap would provide a major boost not only in terms of price, but also in visibility and prestige. People tend to gravitate toward projects they see ranked higher, and this visibility can create a chain reaction, attracting new investors. Such a jump could trigger a domino effect, further driving XCN's price upward. Liquidity is also a critical factor for XCN to reach this point. For a coin's price to increase sustainably, trading volume must be strong, and there must be a sufficient balance of buy and sell orders in the market. If the increase is driven only by a short-term pump, it may not be sustainable. However, with strong volume support and long-term investor confidence, price rises tend to be more stable. Currently, XCN shows a certain level of volume stability, but being listed on more exchanges, expanding liquidity pools, and achieving higher trading activity on major exchanges would significantly increase the likelihood of upward movement. Listings or expanded trading pairs on large exchanges such as Binance, Coinbase, or OKX would give XCN broader access, which is critical for attracting new investors. Technological developments and ecosystem expansion behind the project can also support price growth. Achieving lasting success in the crypto market requires more than focusing solely on price increases. The project must continuously innovate and offer value to investors. If the XCN team delivers strong updates, partnerships, or innovative products, this naturally increases investor interest and pushes the price upward. Integrations with DeFi, NFT, or blockchain infrastructure projects could add significant value to XCN. Additionally, community management, strong engagement on social media, and regular information campaigns create positive pressure on the price. Investors need both transparency and consistent communication to trust a project. From a psychological barrier perspective, XCN reaching a market cap above $500 million would mark an initial threshold capturing investor attention. This level conveys the perception of a mid-sized strong project to many investors. Surpassing $700 million, meanwhile, would not only improve its ranking but also grant the prestige of being in the top 100. From that point, interest in XCN could increase exponentially. People tend to be more curious about coins climbing the rankings and do not want to miss potential future gains. The FOMO factor in crypto markets is particularly powerful. Once a project enters the top 100, it receives more attention on social media, is analyzed by more experts, and gains media coverage. This increased visibility acts as a stronger catalyst for the price. Expanding XCN's investor base also depends on staking, reward programs, or community incentives. If users prefer to lock their tokens long-term rather than trade them, circulating supply decreases, making price increases easier. Tokenomics strategies implemented by the XCN team could be a key factor supporting ranking growth. Similarly, burn mechanisms or supply-reducing programs have a positive long-term effect on price, as limited supply in crypto markets always creates higher valuation potential. When all these factors are considered together, XCN doubling to reach a $704 million market cap and entering the top 100 is not just a possibility, it is a scenario quite achievable with the right strategies and favorable market conditions. The key point is that this growth should occur as part of a sustainable growth trend, not just short-term speculation. Sustainable growth reinforces investor confidence and lays the groundwork for higher price levels. If XCN manages this process correctly and market conditions are supportive, entering the top 100 could be just the beginning, with the potential to rise even further in the rankings. In conclusion, although mathematically XCN only needs to double in price to enter the top 100, in reality numerous factors must align to support this jump. Investor interest, ecosystem development, strong partnerships, listings on major exchanges, increased liquidity, and community support all will be decisive. If these conditions are met, XCN can not only enter the top 100, but also climb higher, gaining broader adoption in the crypto market. This in turn could create a chain reaction, further driving the price and exceeding investor expectations.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.